Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
You must spend a lot of time speaking with your clients about inflation and inflation resilience. What is your take as a firm level in terms of whether we have inflation tamed at this stage?
Yeah, thank you, Ethan. I just remembered the last time we spoke on podcast, which was a few years ago, and we were talking about the need for orthogonal thinking. I think nowadays this thinking is even more required than it was a few years ago when we connected last in a podcast. This is how you need to treat all this data that is coming through. So, for example, oil prices, which we see in front of us. Yesterday, with the sanctions from the US on Rosneft and Lukoil, all of a sudden there is a spike in prices. So this whole system of how various macro themes are feeding into the stability of the economic system has become much more complex and much more fragile. So you have this, I would call them tectonic shifts working their way through the system. Completely different macroeconomic policy compared to how it was before COVID. You have technological advancement with AI. You have fiscal stimulus. So there are lots of forces there that make it really difficult to predict what is going to happen with the economy or with inflation in particular. But all that said, the conversations that we have with clients, we would probably be saying that the market is somewhat complacent right now in how it prices potential risks of inflation. There are obviously some disinflationary forces feeding in, such as potential for AI, for example, the productivity that still keeps going strongly. But then the number of forces that are feeding through the system that are inflationary, I would argue, much more powerful and arguably underpriced. So be it fiscal stimulus, be it immigration policies, be it the capex that are flowing through the system on technology, of course, tariffs, reconfiguration of supply chain. So I can carry on and on. But the key takeaway here for me would be that despite the volatility and potentially some softer signals in the last week, I would still argue that risks are skewed towards higher inflation.